This story starts with four interesting characters. Alte, laid back, somewhat elusive character with a briefcase full of incomplete paperwork. Wears a detective-style outfit, a nod to her need for more documentation. Stanley Standard, the standard mortgage, a robust and organized character, always equipped with fully detailed and well-ordered files. Doc Unity, the documentation fairy, wearing glasses and a cape made of various financial documents, she can streamline loan approvals with her magic wand. Susie Subprime, the subprime mortgage, an energetic, risk-taking character, often rushing ahead with little concern for the consequences.
Welcome to Paperwork City, where mortgage characters are always busy with approvals and applications.
Another day, another set of complete and verified documents. Right, Alter?
I wish I could say the same, Stanley. My borrower's income and assets are not fully documented, and that makes me a bit of an enigma here. But I must find a way to streamline things.
Did someone call for a little documentation magic? I can help make the loan approval process more efficient.
That's all well and good for you, Doc Unity, but we can't forget the lessons of the past. Remember Susie Subprime?
Live in the moment, Stanley. What's life without a little risk?
The thing is, I don't want to vanish like many of my kind did after the financial crisis. I need to ensure I keep a balance between risk and reliability.
Well, let's sprinkle some alternative documentation into the mix. We can still streamline your process without being as risky as Susie.
So instead of looking for every little detail, we accept things like paycheck stubs and W-2s.
But keep in mind, it is still important to maintain full documentation to ensure responsible lending.
Then let's update my briefcase with the right mix of efficiency and thoroughness.
And so, Alte learned to find the perfect balance of speed and detail in her documentation, ensuring a more reliable future for everyone in Paperwork City. Our story takes place in Debtsville. We have 6 incredibly interesting characters. Amy Amortization, a diligent accountant, she's all about balance, ensuring debts are chipped away systematically. Principal Penny, a shy yet determined character. She's always looking for ways to slim down. Interest Ivan, a loud and flashy character who loves big numbers but knows he's gradually overshadowed by Penny over time. Payment Pete, very dependable and ensures every payment is delivered on time, divided between Penny and Ivan. Grace Gracie, a sweet, patient character who gives people time to catch up but warns when deadlines loom. Late Leo, a grumpy fee collector who shows up when payments are overdue.
Welcome to Debtsville, where we tackle loans head-on. My job is simple: balance principal Penny and interest Ivan every month until the debt is gone.
I'm the actual loan balance. Amy's payments help me shrink, but it always feels like Ivan gets the bigger piece of the pie first.
Of course I do. I represent the cost of borrowing, Penny. I take my cut from Pete every month before you even see a penny. Relax, everyone. I'm here to handle the scheduled mortgage payment. Amy sends me out like clockwork, and I divide the payment between Ivan and Penny.
Right now, we are starting fresh. Let's say the loan is $100,000 at 6% for 30 years. Pete's first payment is $599.56. Ivan, you get $500 out of that, 1/12 of the annual interest rate on the loan balance.
My favorite number, $500. That's 6% annual interest split over 12 months. I love the start of the loan term.
That leaves $99.56 for me? I mean, it's something. At least my balance will be reduced to $99,900.44 after Pete's first payment.
Don't worry, everyone. Borrowers have a 15-day grace period to send Pete on his way. If Pete's late, though,
I show up to collect a 4 to 5% late fee. Pay your bills on time, folks, or I'll make your life miserable.
Now, here's the magic: as Penny's balance gets smaller, Ivan's interest slice shrinks too. The next month, Pete's payment will still be $599.56, but Ivan's share will drop to $499.51. Penny, your share will grow slightly.
So I'll shrink less and less as payments go on. And eventually, Ivan will barely get anything.
That's true, but I'm still a big deal early in the loan. Borrowers should remember, the faster they pay down Penny, the less I take in the long run. That's why extra payments toward Penny can really help save money over time.
But don't forget to pay on time. I'm forgiving for 15 days, but Leo doesn't take excuses.
The Loan Jungle Adventures. Let's introduce our characters. Finny the financing fox. A sly, orange fox who loves shrinking numbers to make loans look more attractive. He represents the amount financed concept and is quick to mislead borrowers into believing they are getting a great deal. RP the perplexed owl. A wise but often confused owl who tries to explain APR but ends up getting tangled in its complexities. Despite her good intentions, even she struggles with the finer details at times. Miss Truth Lens. A superhero who wields a truth lens, a magnifying glass that reveals the hidden costs of loans. She advocates for transparency and debunks false assumptions about long-term loans. Time Travel Timmy. A time-traveling turtle who helps borrowers understand how their loan costs change over time. He carries a time horizon calculator on his shell to show the true cost based on different time frames. This is Bob and he is very lost in the financial jungle.
Ugh, $96,000 amount financed? So I don't have to pay those upfront fees, right? This loan is a steal.
That's right, Bob. Those fees are practically gone. It's like they were never there. Isn't $96,000 such a lovely number?
Not so fast, Finny. Look again, Bob. Those $4,000 upfront fees didn't go anywhere and they're just hidden. You're still paying them even though they're not in the amount financed.
What? So, the $96,000 is just a trick?
Exactly. Ignore the amount financed. It's designed to confuse borrowers like you.
Fine, but he still has APR to figure out. Good luck with that.
Seeking clarity on the APR. I could explain it, but, oh boy, it's complicated. It's not just the interest rate, it's a combo of interest and certain fees. But not all fees, and if it's an arm, forget it, future rates make things murky.
This is worse than the jungle. How am I supposed to compare loans?
That's because APR isn't perfect, Bob. It leaves out a lot, like title insurance and appraisal fees. Instead of relying on APR, focus on your time horizon cost, how much the loan will cost you over your specific time frame.
That's where I come in. Let's say you're planning to sell your house in 5 years. For that short time frame, a loan with low upfront fees might be cheaper, even if it has a slightly higher APR.
Wow, so I don't have to understand all this APR math if I can just focus on my time frame.
Exactly. Use tools like a time horizon calculator to compare interest costs and fees for the years you'll actually have the loan, rather than the full term.
These tools are amazing. I'll ignore the amount financed, be cautious with APR, and focus on my time horizon costs instead.
Remember, Bob, a loan only works for you if you understand the full financial picture. Don't let Finny trick you with flashy numbers. Even us owls struggle sometimes, but knowing what to look for is half the battle.